Hi, we are live. Sorry for the delay. First technical hitch was the London traffic, and we didn't factor that in. We have all the gear and no idea here. This really is the very first podcast that I've ever done. It's the first time I've even really interviewed anyone. So be nice, and I hope that this can be the start of quite a few live podcasts. I've got a lot of people who I would like to interview, and over the last, 18 months, I've been really lucky to meet some very interesting people in property, and I thought it would be great to ask them some questions and get their view on property more broadly, looking at finance, at construction, funding, obviously, here. So I hope that this is the start of many. So here with me today is Atuksha Poonwassie, and she is the co-founder of Simple Equity. So thank you for joining me.
You're very welcome. Hi, everyone.
So we are here at the Devonshire Club, and we're having high tea. So at the moment, our tea has just arrived, which is here. We've got a lovely Japanese tea. So we'll be pouring our tea. We'll be drinking. We'll be enjoying our cucumber sandwiches when they arrive. Jane's going to be joining us soon as well. So it is going to be very informal. There will be background noise. There will be people in it, but we just want to have a very informal chat about crowdfunding and more specifically Simple Equity and what they are doing in this space. So just as a little background, we met late last year for the first time, didn't we?
We did.
Yeah, so we were introduced by Piragash from Totem Finance. He is a broker working on a couple of fundings for me. And he just raised the idea that I should be looking at crowdfunding, and that he had a solution for us for that crowdfunding with Simple Equity. So he introduced us, and for some reason we both ended up getting there early, didn't we?
We did.
So we ended up having
half an hour.
So we ended up having the whole meeting before Piragash had got there, and it wasn't long into that meeting that I realised that I did want to work with Atuksha and Davin, because I just felt that their ethics and their morals were aligned with what I was trying to do, and they really understood what we were trying to do at East 8 as far as our crowd raising and being compliant with the FCA. So just if you could tell us, how did you actually get the idea of crowdfunding, and what were you doing before that?
The idea came about completely by chance. We did a lot of property talks. We went to a lot of property events and things like that. And it was actually at one of the property events, someone had mentioned crowdfunding and said, this is an area that sounds very interesting and it's something that you should explore. And they explained a little bit about it. And Davin and I came away and said, actually, this sounds really interesting, and we need to find out more about it. And that is how the whole thing started. It was purely by chance. Before that, so Davin's background was in IT. We're both property investors. We have been for a long time.
And is that why it was property specifically? Because obviously there are a lot of things that you can crowdfund, but property is what you've chosen to do. So is that the reason, because of your background in property?
We love property. We love the property space and the people within it. And it was a really, really good fit for us. My background is I run a CRM consultancy. I started that in 2000. And it's all about building a raving fan base. And so we've helped loads of customers do that. Eurotunnel, some of the best in the world. And going into crowdfunding was an extension of that, because it's about building even bigger crowds and building bigger fan bases, and then being able to do that in the property space. The things that we absolutely love, we were able to bring together. It was a no-brainer. And we set up our first platform in 2013, and we haven't looked back.
Okay, and what was the first platform?
The first platform is our debt platform, Simple Backing.
Can you explain the difference between the equity and the debt? Because when I've worked with you, it's on your Simple Equity site, and that is, as the name suggests, equity. But you have got the other side as well, don't you?
Yeah, so the Simple Backing one is loan-based lending. It's peer-to-peer lending. And what happens with that one is it is like a loan. So you can say there'll be a person looking to raise funds for their project, and they might want to raise 200,000, but for that, instead of sharing the equity in the project, they'll basically say, I'll give you a 8% return or a 10% return. And so investors know what they're getting, and for that we normally take a first or second charge on the property. And so that's the main difference between it, between equity and debt.
The debt. Okay. And I know that you've recently had some good news on the debt side. Can you share that with us? Are we allowed to?
Last week,
while I pour you some tea.
End of last year, it just went berserk. So, long story short, we set up our platform in 2013. In April 2014, the FCA, the Financial Conduct Authority, took over. Both platforms are regulated. And so platforms who were in operation before that date were allowed to apply for something called interim permission. So they could carry on trading with their platforms, but at some point the FCA would want to review all of your paperwork and processes and all of that
So an
stuff.
audit, in effect.
Everything.
Yeah.
And so platforms who applied were put on interim permission, and then they were given their window for when they had to submit all the information to the FCA for review. So most platforms, their window closed in October 2015. Ours closed in November 2015. Then you start the dance in terms of having the information sent through, a round of questions, send more information through, next
Jane,
round of
come
questions.
and join us over here.
Hello.
Hi. We are live. But just join us.
And you sort of start that process, and there are some platforms that have been in that loop for 2.5 years or thereabouts. In November last year, we got our full authorization, and we believe...
Are you one of the first? Or?
We believe we're the first property platform to get through it. We beat Lambay through it, which is fantastic, but we beat them.
Wow.
So we were just so happy about that. You know, we actually had... from what I understand, it was a fairly straightforward process for us, and we were just really fortunate to come out the other side, being a small business, which is what we were, because we made a decision not to carry on taking on lots of new projects whilst we were in this review process with the FCA.
Because you had to focus just on that, because it was an audit, wasn't it? So you had to provide them with so much information, and if you were concentrating on the raise of funds as well, it wouldn't have been possible. Is that that's right?
Also, but if the FCA requested any changes in our business processes or models and things like that, we didn't want to have lots and lots of projects on our loan book, because then we potentially start hitting problems.
Our afternoon tea has just arrived. You can put it here actually, so we can get straight into it. So, so just there is perfect, and I will show you. Look what we've got here. Look at that from the lovely. I'll bring it all the way up here. Look at that. Oh my goodness. Jealous yet? Lucky I'm going for a run tomorrow. Thank you very much for that. So we'll be munching on those while you're watching.
Should I tell you about the...
Look, it all looks lovely. I think we'll be fine.
I think we'll be okay.
Thank you. They're just asking if they want us to explain what food it is, but we've got some really nice food here, so we'll be enjoying that. We'll go straight to the sandwiches in a moment. So you got through that. You're one of the first.
Yes.
You are the first, you believe,
property platform. There are a few which are getting through now. We're hearing of them every so often, but there's still a lot of platforms that are stuck in that position. So hopefully they'll start coming through and getting towards the end of their review process. The other fantastic thing for us is now that we're fully authorised, we could then apply to manage ISA funds. And so we then applied to HMRC to become an ISA fund manager, and we had that.
And you've got that. And
So-
you are the first to have that, aren't you? Do you know that?
Well, I know Lambay have applied for it. I don't know if they've got it yet. So I don't know who else is.
So it could be
through
you and one
on
other.
that. So-
Now, my understanding is that the ISA money is a game changer on the debt side.
Totally.
And is that because of the sheer volume or the rates that you have to offer, or is it a combination, or is it even more than that?
I think there's so many things. The biggest thing for us is people have money in their ISA pots already. They have allowances that they can use, and if you have the opportunity to invest in property where the interest returns could be a little bit better and you can learn about property at the same time, it makes a lot of sense.
Exactly.
And the returns through traditional ISAs and things, some people need that stability and they don't want to get involved and manage it, and that's fair play to them. But for others who are looking for better returns, maybe it's such an opportunity. And the longer term, so you don't need to be providing loans just for a year or 2 years anymore. ISA investments tend to be longer term, which is also great for property people because you can buy stock to hold.
That's right. And they're investing for the income component, not just for the development. And does it also mean, from my perspective as a developer, that I've got access to cheaper funds?
Yes.
Yeah.
Because the interest rates that are typically payable on our platform, they all vary. The average interest rates that are payable on backing are between 8 and 10%. But with ISAs, because they're also then tax-free, you can bring the rates down a little bit.
Yeah.
And it will still be a good deal. So
that's what I'm interested in as well. And also, something that you mentioned when we were talking about the other day is bonds. And I think bonds have become a bit of a buzzword recently as well, and people are talking about bonds. They're really expensive to set up. The fees are very, very high. But you can also have bonds listed on is it on the debt side or the equity side?
We can look at bonds on the equity side. So we choose not to do any of that. And it might be something we'll consider in the future, but at the moment there's too many things going on, so it's better for us to just focus and stay put with equity, pure equity, and then pure debt.
Pure debt, okay. And at the moment the equity side of the business is the most active, is that right?
Absolutely. It's gone crazy. It's your project.
I'm so sorry. What a problem. And when did you actually have your first project listed?
The first project was listed actually when we launched. So we launched at John Corey's Property Fortress event. So we hijacked his event for the evening and we launched there, and we actually launched with 2 projects. So there was a win-win rent-to-rent business on there and the Century Spaces development project as well. So it was those 2 we launched with.
Yeah.
So, and that was in August.
Wow, okay. And then we met in October, and we did our first in October. I think, just for those who are wondering about the process, it actually took us not even a week to get our first project live with you. And actually just talk us through the process. So and also make sure you have some tea and sandwiches. But talk us through the process. So when I want to come to you and list one of my projects, how does a developer do it, and what do you need from us, and then what sort of time frame?
There's a lot of information we need. So the first thing we'll do is some people will just call us up and say, I've got a project, so we'll have a quick conversation about that. We'll run through some basic questions about the project itself. But there's actually quite a lot of information we do need. So we typically send out a questionnaire on the back of it. It's going to ask about the raise amount, the shares that you want to issue, especially on the equity side. It's going to ask about your experience as a developer, It's going to ask about the project itself, what the projected returns are going to be, what the financials look like, the legals, all of that stuff. So there's quite a lot of information that we need. So once we have that information, we then do the checks that we need to do for our platform.
And that's your legal team who then do that?
We have compliance, and we also have legal people that we can tap into. A lot of it's done by us. So it just depends on what information we see and find. So the initial checks on the company that's doing the raise, if it's through a company, the directors of that company, all of that, will do those checks. And as long as that's okay, we'll then evaluate the project itself in a lot more detail. Do the numbers stack up? Does it make sense? Do we have the information we need to upload? All of that stuff. So we go through that process. So we're not, at this point, we're not saying, yes, this is a great project to invest in. What we're saying is this project is right for our platform. So, and that's what we're saying at that point.
And the people who are presenting this own the properties and have the right to market that and raise finance for it, that sort of thing. So, and then you format it all and put it up on your website, and it goes live. And people pledge. And hopefully you raise all your money. And it's true that you have to raise all the funds for the project to then be funded. Is that correct?
So if your raise is 500,000, if you get to 490,000, you don't get a penny of it. So you have to hit your pledge total. So we always say the amounts that you're looking to raise have to be realistic, because people will ask, they want to know what that money is going to be spent on as well. So if you're trying to raise an extra 200,000 as contingency, one, you may get to 600,000, in which case you could have gone ahead with the project and had the funds, but also people will question why you're doing that. So all of that comes into play, but you absolutely have to hit your pledge total in order for the funds to be released.
And I found that with my raises, there's a real psychological play out there, and I wasn't. It's a crowd psychology, isn't it? And I wasn't quite prepared for that in my raise, and thankfully I had. For my first raise, which was Dalston Lane, and we raised 1.4 million in 9 days, I actually had most of my investors line up, and I'll be very open and say that. So yes, we raised a lot of money, but I had a lot of those investors there, not all of them, but a lot of them. And so for me then it was, but I will say one thing with investors is you never know that you've got an investor until they actually part with the cash, and that's what I also like about the crowdfunding, is that it secures the funds in a way that I know I can rely on it, and the investor knows that they can rely on it as well, because it's going into an FCA regulated account. That's fair to say?
So what happens is, from an investor standpoint, they then pledge. That's the first thing they'll do. We then request the funds, and those funds are held in a wallet within the system. So our payment provider is Mango Pay, and we basically hold the funds. So they're not released to the person who's doing the fundraise, the developer, but we know that they're available, and they're just, it's like cordoning them off. So if you've invested £50,000 in a project, we cordon that £50,000 off, so then you can't go ahead and spend it on something else. Because if the project goes ahead and all the paperwork and everything's fine, we need to, at the end of the day, make sure that we don't fall over at the last hurdle where people have decided, actually, you know what?
I've decided not to.
So this allows us to be able to do that. And if for whatever reason it doesn't go ahead, the funds just go back to the investor.
And the what I was going to say is also they can invest as individuals or as a company, can't they? It's not just an individual, it can be both.
The information that we require as an individual, we have the basic sort of address information, personal information, IDs and things like that. For companies, there are more checks to be done.
Yeah.
And so there's a lot more information that we require. But once we have that, and once those checks have been done, then we're fine.
Sure. And it's a compliance issue, and and then they've got 14 days cooling off period. And when does that start from, and when does that end?
The 14 days starts at their pledge. So once they make that pledge, they can decide against it within the next 14 days if they want to. But after that time, they're committed.
Sure. But what would happen if I committed, my 14 days were up, and then I decided I didn't want to go ahead with it?
Of course, we're going to try and figure out a way to make it work. What we can't be doing is having lots and lots of people, the day before the project's due to complete, for example, to say we don't want to do this. So we have to have some sort of guidance in place on that. We obviously try and make things work out. We work with the developers, the fundraisers, and we'll also work with the investors to understand what it is and why and all of that stuff.
And just to go back to the psychology of it all, and it's very much true that people won't look at a deal until it's about half full. Is that correct? Half, 60% full?
It's anything between 40 and 60. It depends upon who you're talking about and what the project's about as well. So 60% absolutely, and people think, oh no, it's going, I'm going to just get in there quickly. So your Dalston Lane, for example, because that went so crazy, we actually had lots of people coming to us saying, we missed out what was going on already. We don't understand this. Exactly that.
Yeah. So, but it is, I've found that once you get to that 70% mark, that's when everyone piles in. And that's the psychology of a lot of things as well, as people see that something's becoming sold out, and they'll jump out, and they'll jump in because they don't want to miss out. And I think a lot of people who do hard sell tactics use those sorts of things as well. But with crowdfunding, you have to actually have those people. You can't do a hard sell tactic because people can see it up there clearly. You've only sold as much as you've got pledged publicly on the website. So it's very transparent, isn't it? And that's what it's all about, being very transparent.
Absolutely. And it does take a little bit of time to kick off the project properly, because even if you put a project live, the chances are people are going to have questions about it. And so if they have questions about it, that takes a little bit of time. But as soon as people start seeing others who are pledging, then they absolutely want to get involved. Absolutely.
And as a developer, if other developers out there listening are wanting to get involved with Simple Equity, I've been inundated with people saying, what's your experience like with Simple Equity? How do we get involved? One person, I don't mind saying this, contacted me and said, can I please use your investor pack as the template for mine? And I was like, fine, you can have it. I probably borrowed it off someone once upon a time too. So look, I'm happy for other people to use my investor pack. Clearly it worked twice and hopefully 3 times now. But what would you say to people who are interested in coming to you as a developer?
I would say absolutely get in touch. That's the first thing. The second thing is register and get a feel of what crowdfunding is about.
I haven't done that yet.
That's just cheeky.
I haven't had time.
But actually, you put projects on, so I'll let you off on that one. But actually, just get a feel of it. It's about the community, and it's a really, really nice space to be in. And when you start seeing projects coming through, if you register, you can download some of the information that's available, not all of it, but some of it, so you can see what other people are doing as well, and you can keep tabs of what's coming up.
Oh, okay, I'll look in.
So it's definitely worth doing. Worth doing.
And what does it cost for developers to go on your site and raise? What sort of fees are involved?
So we do try and keep it simple, true to our name. True to our name. There are 2 types of fees that we have. One is we don't charge investors. That's the first thing. So it is the fundraiser who pays the fee.
Yeah.
And we have legal fees. And so we have standard amounts accommodated for in our standard fees. But if it's unusual and we do need more compliance or more legal work, then we will charge for it, because we get charged for it. So then that's that. And then we have a platform fee. But the platform fee is only payable once we reach the full pledge total.
I see. Okay.
And that's 5% of the raise amount.
Sure.
So, and that's how it works.
Yeah.
So every platform's different, but that's what works for us.
Yeah. So if you put something on, you pay the legals. If you don't raise the money, then you don't have to pay the 5%, and everyone gets their money back who has pledged up to the amount that didn't quite get raised. Okay. And as I said, it took me a week. I think it was even less. I think it was about 4 days to get my project live, but I had everything ready. So it's about being organised and having all those things ready for that. Generally, it takes a little bit longer, doesn't it?
It does, only because if we don't know you, for you, because we had all the information together, that did make a massive difference. What tends to happen is we usually have a bit of a sort of to and fro in terms of this is the extra information we need, this isn't quite right, and that does take a little bit of time. And even once we load it and have it available and visible, we still need to do some sort of final compliance checks before we can make it live.
Yeah. And then I guess the important question for people is, or developers, is how long does it take to get your money? From the time that it's closed and there's that cooling off period, how long until they can get their funds?
Again, it really depends upon how that project's gone. So we do have that cooling off period, so 14 days from the last pledge.
Yeah. So
that's the first thing to be aware of. We have some compliance checks which we need to do before we close the project.
Yeah.
And, it depends what agreements you used, how those agreements are managed. There's a whole load of stuff there. So we're in the process of adding all of those parts into the system to make it a lot more streamlined and a lot faster.
Because that's an issue, isn't it? With our Harrington Garden project, for example, we've got 39 shareholders. So we have to, and Simple Equity, have to manage, and Jane over there, she has to manage 39 shareholder agreements, which all need to be signed and verified. And that's a lot of admin. So the change that you've got coming through it's a game changer for you and for us.
Going to make a massive difference. So basically, for people who register, so if you're an investor, you have your own dashboard, and it will give you a summary of everything you've invested in. Yeah. And then under each project, it will then tell you what stage of that project you're at. So I've made the pledge, I've transferred my funds, I've seen the shareholder agreement, and then you have to just, on the system, confirm you've received it, you understand it. So that's done electronically. Then all the other documents will be available to them as part of that project, which allows us to be able to close that project off faster. Okay,
so you don't actually need to have a signed and witnessed shareholders agreement?
Because all of that paperwork, all of
Jane's cheering. I'm surprised you can't hear her. It's been a process, it really has. What about if you're getting additional lending, though? It could be the case that the lender want more information than you require for your purposes. That's correct, isn't it? So we've had that with Dalston Lane. So we needed our investors, anyone who was over 5%, to be verified for our bank. So we had to then provide more information.
Yeah, it depends on what additional funding you're looking at. So as part of our company raises, anyone who holds more than 10%, we get additional information for. It just happens that certain lenders, there's a couple that have taken it down to 5%, there's some that will take it to 20%. It really depends on who you're talking to. So there are instances where you will need to do additional work on it, but it still has, the person still has to be investing over a certain amount in order to hit that. So you don't have to do that with everybody then. Yeah. So it's a lot less paperwork to do.
We're really excited about that. And look, for us, as a little bit more background, is the reason that I chose to do the crowdfunding is because I felt uncomfortable. I would never take anyone's money if they had less than 250. I wouldn't, because of FCA regulations and policy statement 13.3 and collective investment schemes and all of that. So a lot of people are approaching me saying we want to invest in your projects, but I had to turn them away because of that. So by working with Simple Equity, it means that I'm able to take investment from people with as little as £500 on Harrington Gardens and enable them to invest into a project that they otherwise wouldn't have access to because they are only available. So that's why I like it. But it has been great, especially with Harrington Garden, the raise there. We opened that up to so many new people. So while Dalston was predominantly my own investors, Harrington was a whole new group of people that were investing £500, and they were really excited to be involved and are still really excited to be involved in that project. So I don't want to say that we brought everything to the table. We definitely didn't. Simple Equity brought on some of their investors as well, and that's been really exciting. But we have some big plans for this year, don't we?
Super big.
Big. Are we allowed to talk about it?
We can do. Why don't you start?
Okay.
You start.
So you're allowed to raise up to €5 million without a prospectus on crowdfunding. So our goal quite early this year is to raise €5 million, but obviously in pounds. So we want to beat the current record. The current record is 4.15 million from a very well-known property developer out there, and we would like to beat that. So we have
in what, a week?
Yeah, we can do that. Yeah, we've got some good investors out there, and I've got a really good project. I can't say anything more about it at the moment, but I've got a really good project lined up that will be a very exciting project. So once the contract is signed on that, you'll be hearing a lot about that, because we really want to beat that previous record. And you're really excited too, aren't you?
It just means we can get so many more people involved as well, that's what I absolutely love. You know, I'm going to go back to Harrington for a second. So 600,000 was the initial raise.
Yes,
we had so many people come back to us straight away as soon as it closed, saying, "I've missed out. This isn't good. What can I do about it?"
Yeah.
So then we
opened it
up again, didn't we, to do an additional raise on that. But so you gave up some of your equity stake.
We didn't dilute any of the current shareholders. I was from my allocation.
And so by we then created a wait list.
Yes.
But we were able to help people, which was really quite cool on that basis. So I think with the larger ones, there is so much more opportunity for people to get involved. And we hear it all the time. People want to get involved in decent projects, and they want to learn.
They do.
And I know for a fact Estate LCD are going to be providing updates. You know, you're very engaged with people, and you want to share, which is fantastic for us. You do that on a big scale. It is a game changer, isn't it?
That's right. Marina will be launching an Invest to Learn program for people who invest with us, so that they can see as we build, and the whole process from start to finish, from the crowd raising through to the disposal, if it's a sale, or the rental if it is a build to rent. So they will be able to see all the way through that process, and that's something that Marina's working really intensely on at the moment. And that is because I really feel that if I teach people, and look, I'm not an expert, but I've just done this a few times now, but if I can teach people how to do it, number one, they'll probably see how hard it is and want to invest with me rather than do it themselves. Sometimes I'd rather be my investor. But number two is, if they do find a site or a project that's too hard for them to develop, hopefully we've got that good relationship that they're going to bring it to me and we can do it together. And that's what I love about property, is the collaborative spirit. I don't feel like there's competitors. I feel that we really do collaborate, and that's really exciting for me.
And for me, that's the absolute key, because on the property side and on the crowdfunding side, that's one thing we're finding. Is people are like, well, these guys are your competitors. Well, actually, they're not. If you work together, you'll be able to make a massive difference. And so for us, we're very happy to help other crowdfunders.
Yeah.
Because if everyone works together, you can actually you can change it. You can, from a crowdfund's perspective, change it from being alternative finance to regular finance.
Yeah.
That's my goal.
That's right.
I would love to be in a position where people just look at crowdfunding because it is just a viable opportunity.
That's right.
On the property side, there's enough for everybody.
Yeah.
And even when we started out in property, there were enough people there who were helping us and were happy to share their knowledge and information. So why wouldn't we do it?
No, exactly. Why not give back to other people?
Yeah.
I just don't see any point in holding that close. Yeah, so this year we've got those really big goals, and we will be releasing more information as we can about this really large crowd race. And I really don't think that we do have to limit ourselves to the 5 million euros, because really to put together a prospectus is not that difficult. Having worked in banking before, I've seen the process, and I do believe we can do it. So if we do find a really good project, then I would be happy to produce a prospectus as well. The biggest driver for me right now, and what the equity is exciting, but for me it's the debt, because I really believe, and I've been ranting to Atuksha all week, I really believe that the debt raising side of with banks and lenders, development funders, bridging lenders, I believe that the industry is broken, and so I want to find an alternative. And so for me, the crowdfunding is a very valid alternative. So we're looking now to work with simple backing to find a way that we can tap into the crowd for our debt rather than having to go to traditional lenders. And once we have that in place, our business will be a completely different business to what it is now. And already we've got a really exciting pipeline as East 8 and London Central developments, but with some help now from simple backing, I believe that we'll be able to change that up even more. So any other exciting things that we need to share?
Where to begin?
I've shared everything that's relating to our business, so what about you?
Oh, we have some, so the main focus for us right now is we are making some changes to the systems to make them more automated, as we mentioned. Yeah. It just means we can streamline that whole process. As soon as we've done that, then from beginning of February, we're looking at the ISA part of it, because the sooner we bring that on, we have people waiting with projects. They're like, we need to have this in place, because it will completely change how we operate. And if we're able to have an environment where people can then choose whether it's going to be an estate, LCD, equity, or a debt raise, and they can decide what they want.
So we can do both. Yeah. So with one project, so we've got another one that's live on the site with a waiting list, for example, and we need to raise 1.3 million in debt, and then 1.3 million in equity, and then about $1 million or so in debt. So we could actually have that listed on both platforms, the 1.3 equity and the 1 million in debt.
Yeah, absolutely. Okay. So, and then that way people can just choose how they want to work it. It just depends on what their risk appetite is going to be. It's going to depend upon whether they just want to be so higher up the food chain if things were to go belly up. There's so many different factors, and it might be that they just want to use their ISA money.
Yeah, or
in which case it would be debt.
As far as return if things do go wrong. So I guess you're safer from that perspective with a debt.
Yeah, because the typical project on the debt side is we typically loan 70% loan to value. That's the first thing. So there's 30% in there in case there's a problem. It's normally first or second charge. Yeah. First charge preferably, but we will consider second charge depending on the project. And because we take that as security, then we know that the investors are going to get their 10% plus their loan amount back if something was to go wrong. Yeah. Whereas on the equity side, you're buying shares in the company that owns the asset.
Yeah. So while it's safe in that it's not a charge on a second charge on a property that's already encumbered with other lenders, you are an owner of the property. So
right, so you're at the bottom.
That's right.
But because of that, that's why the rewards tend to be better, right? So you share the risk and you share the reward.
Yeah.
So that's why it comes back to what people's appetite for risk and where they are in their life, and all those things come into play.
Yeah.
But having the opportunity to present both is fantastic, because then people can choose what they want.
Yeah, that's right. So speaking of appetite, we better go back to our afternoon tea here. Our scones are getting, or scones are getting cold. But Atuksha, how can people contact you if they're interested in listing a property on simple equity or simple backing?
The first thing I would say is just go to our websites. All our contact details are on there. So simpleequity.co.uk or simplebacking.co.uk.
Depending on equity and debt.
Yeah.
And if you're interested in any of our projects, we've got one that's waitlisted there, which is in West Norwood. It's a lovely site. I actually went there this time before we exchanged on it. And we have some really exciting ones that are coming up. And you can find out more about me on my Facebook page, or I'm really enjoying Snapchat at the moment, so find me on Snapchat as well, or on our website, and you can contact us via there. So thank you so much for joining in today, and also for those who listen afterwards. And any questions, I'm happy to answer those. Thank you.
Take care. Bye-bye.
Bye. Can hit finish.